Good morning to all traders and welcome to another Markets and Waves. Today is Friday, the final day, trading at least day of the week. And it's very likely that we're going to see some maybe important moves as well, should of course the triggers that we saw yesterday continue. It is June 11, guys, and we're here again with another Elliott Waves update. And in this session, we're going to have a look on the DXY again, the US index, the dollar against the yen, US oil, the S&P as it marches to new highs, marched already actually, and also natural gas as it's broken from a wouldn't say range, well, the range top, okay, that has been traded for a while now below actually, and likely we're going to see a very interesting move taking place in the near future. On the DXY, guys, we've talked about hold on, where are we? There. We've talked about that being an expanding flat, and we're going to move higher up and then continue lower. We did move higher up and then we started moving lower. However, this alleged wave C is not a 5-wave move, which means now that the flat is invalidated. Okay, although we get a nice 5-wave structure over here, if we look internally, guys, and a little bit closer, excuse me, you will realize that this is 1 and 2, and internally you got 1, 2, 3, 4, and 5. So that is the 3, then the 4, and the 5. We need to go down in the 15 minutes sometimes when the markets don't make sense, because I'm expecting a 5-wave move up and I'm getting only a correction, right? I'm getting like an ABC. So something is not right. So we really need to go deep and analyze what's really going on. And we identified that the 5 waves down here are ending at this low around 89, 82 or 83. Regardless, for me, the correction is in now. Okay, we've got a nice double top as well here. And looks like to me this is wave 1 and 2. And we're going to start getting the impulsive wave 3 now, all the way down for 3, for 4, and then 5. Okay, and that of course is going to be in the immediate wave 3. Now, no, some of you may think this is crazy. This is 1 and 2 only. How much downside we're expected to see? Well, just to have a bit of a perspective, we can just simply use Fibonacci over here. Yeah. And go down to 100 at least, which is the 8670. You can understand that the 1618 is at 84. We don't need to go down there, okay, obviously. And don't forget that this is still 5 of C of X, okay? So it could just be a case where, you know, because our 3 is here, 89, and our 4 is just that long. Let me show you quickly. It could just be a case where my wave 5 going to be the same as wave 4 from the previous break. That is going to be, yeah, around there. And look at this, it comes a bit shy of the 161 target at 85. Okay, which means of course that wave 1 having this size, we're probably going to get wave 3 being equal to wave 1, okay, around, well, it's not going to be 86, but it's going to be 85, 65, which would make sense. And then we could get a very short 4 and wave 5 down to 85 or so, okay, so just a tiny bit off. Obviously, this is like the long shot, guys. Yeah, we're still very far from that level, and we still haven't even gotten anything validated yet. Okay, we're just looking at the markets in fractions. For now, what we're really interested about is that we want to, since we have wave 2 and 1, we want to ensure, oops, that one should be here. We want to ensure that prices remain below this top trend line, okay, in order to somehow support the downside move. Eventually, it will break at some point and then retrace and continue lower, okay? So keep an eye on that DXY move, even today because it's Friday, because this is going to signal. We're talking about the DXY, guys. Potential moves on euro dollar, pound dollar, dollar yen, dollar Swiss franc, Aussie dollar. Not what other currencies. I think they've got more currencies in now anyway, so it's very important to know. Now dollar yen on the other side, it's moving similarly. You remember last time we said for now wave 2 is here and we'll move lower down, but we also said, but I'm not happy with this move because we didn't even get back there, right? So what happened then? We've got a W, X, and Y here. That's wave 2 done for me, okay, and dusted. Now that's 1 and 2. I'm expecting 3, 4, and 5. Then 4 and 5, that will be wave A. Then we're gonna get B and C, and finally we're gonna get this new low in below 107.44. Okay, where we're gonna go, we're gonna have a look later. It's not important now. Once we get wave A over here, 1, 2, 3, 4, 5, we have a better projection for the downside move, right? So I'm happy with this particular move and how it actually takes place currently. Do note that though, you know, still we might get that, you know, moving a little bit more, retracing a little further up, because if we take the Fibonacci, we've done the 50. I mean, it's between the 61 and the 50. Why is this on the left? Hold on, let me just fix this. Okay, we might get up to the 61.8, okay, which is at 109.87. I would not be surprised we get something like that, yeah, and then we'll move lower down, which means, you know, I'm really looking at what is going to happen around that area. Yeah, if we break below that low, most likely we're going down for wave 3. The alternative scenario is that we ended here, and I've said that a million times. This is like a leading diagonal, and we're gonna get wave 2, and then we're gonna get 3, 4, and 5. Guys, okay, but there is no signals now that we can really that really suggest anything for the medium term. Okay, so we're going for the break of the downside over here to somehow support the bearish leg. Now US oil with, excuse me, with this last structure over here, guys, and if you recall, my wave 3 was here, and I didn't like the fact that wave 3 was shorter than wave 1. Now with this structure coming in, and as of course markets move dynamically, we have to adopt. This is a 1, 2, 3, 4, and 5, with wave 3 being equal to wave 1. Okay, this is equal now, and with a sharp wave 4 and a double bottom over here, confirming to me that this is a wave 4. And now we're moving up for wave 5. Okay. Now there is different ways to measure where wave 5 can go. One is to go all the way down 3 and down to 4 and do the 38.2. That's 72.10. The other way is to measure wave 4 and put it on top of wave 3 and measure, and that takes us to 72.55. Okay, and the other one is that wave 1 is equal to wave 5. Wave 5 is equal to wave 1 from the top. You can see that wave 5 would be here, sorry, yeah, around there. So we're looking at 74, but it's very unlikely because wave 3 is equal to wave 1, which means, which pretty much means that what it could happen instead is that we could reach all the way up to 61.8, 72.23 in that case. That would still make it will make a wave 5 61.8 of wave 1, if that makes sense. Okay, and that is fair, is accepted. But I certainly don't think that the the move to the upside here is done. And judging from this first wave to the upside, okay, my 100 Fibonacci comes at 71.39. This is at least wave 3, okay. So I'm not think I'm going to be looking at anything below 71.40 to start moving to the downside. The thing is that we do, and we have been receiving that signal for a while now, guys. Okay, this downside signal, and I am keen to see this receiving a correction. I think though we are going to get another leg up, and this leg up is going probably to give us one last signal over here. Okay, perhaps a hidden bearish divergence, and from there start correcting lower down. Okay, now I know we'll be talking about this and looking at wave 1 and 2 over here. Okay, and this is now my main scenario, as you remember, and this is a running flat in 2, but we still need to remain cautious about the 72.13. 72.13 breaks, that is valid to me at least, yeah, unless if we go into the scenario that this is not 1 and 1 will be up here, yeah, which means this is 1, 2, 3, 4, and 5, and we're going to break above 72.13 and then move all the way down, as in, this is the end of this cycle in the primary degree. Because the scenario we've been looking for a while, yeah, before this move, of course, has been that this is an A, B, and a C, right? But we've got that B and the C, which we're happy about with a running flat for now, and we're now expecting to see cautiously what is going to happen in the near term. And I do think that we're going to get to 71.40 at least, perhaps even anywhere between the 72.50. 72.10 and 73.13, maybe even the extreme, as we said, the 74.50 or so, but I doubt. However, always keep an eye on the left of the chart, 72.13. Okay. Is there anything else to add here? Yes. Well, not related to the oil itself particularly, but guys, with yesterday's inflation figures, S&P is going up. Risk is back up, but also gold is moving up. Natural gas is moving up. It's like the commodities cycle that I've been expecting to happen. So I'm trying to remain unbiased, but keep an eye on all the commodities and try to see how they all move. Don't forget, oil is very, very speculative asset, right? More than the others, especially when it comes to commodities. Being used as a sort of hedge against, inflation or other sort of monetary risks, and interest rates like a hike at the wrong time. We need to look at how money from oil shifts as well. So when we get these move to the upside and we start correcting, where are we going to get these flows coming into? And I think it's going to be the other commodities. Anyway, that is a different topic. Let's get back on here on the equities as well. Bullish, of course, since yesterday, and they have been since down here. We were looking at this opportunity to end lower down. To be fair, I was looking at A, B, and C, if you remember, right? That is still a case. It could still be an alternative, because these guys can be a triangle in wave B. Okay, so this is ABC, triangle in wave B for a running or expanded flat variation, and we expect 1, 2, 3, 4, 5. But this will be my alternative scenario, and that I can tell you I'm biased because of the inflation numbers. So I'm looking at this flat ending this cycle correction, And looking at primary 1 and 2, then intermediate 1, I'm waiting for intermediate 2, then 3, 4, and 5. So we're looking at more upside. But in the short term, because we've had 5 waves up already, 1, 2, 3, 4, 5, yes, it is likely that we're going to get a correction in wave 2. Okay, and this is slightly seen on the MACD and on the RSI. Okay, mainly on the MACD, less on the RSI, but it's very expected, and it could even get down to a double bottom. Okay, in wave 2 over here, we don't know, like around that level, you know. We do the 61 or 88.6 Fibo retracement or whatever, and then we move higher up. But it could just be a very sharp and shallow correction to like the 32.2, or the 42.20 over here. That's the level that you can keep an eye on. And from there, guys, no, we're not looking at res, we're not prices. There we go. It is a 42.18, yeah, or anywhere down to 41.20, 99, 40. That's the 42. So that's where I'm looking for the S&P as well. And natural gas, guys, finally, I've been talking about this move for a while, even from down here months ago. That leading diagonal means to me there is a multi-structural move to the upside coming in, and this is what happened. Okay, now we've got 1, 2, 3, 4, 5 for another leading diagonal internally as well, right? And this is like 1 and 2. That's my 3. It's very impulsive. My 4 is currently building, and I'm going to get my 5 when I finish it. And from there, that's going to be 1 and 2, then 3, 4, and 5, 4, 3, and then 4 and 5. 4, 3 again. And then 4 and 5, and that's going to go to minor 3. Okay, and from minor 3, we're going to go to 4, 5. That's going to be the intermediate 3. So you can understand where this is going, right? But I know I will say but, because there's always have to be a but. We don't get signals on the RSI on the MACD. I don't see anything apart from this slight correction, hidden bearish divergence over here, but I think it will just get invalidated very soon. But we also need to look at the possibility of this being wave A. Being wave A over here, yeah, and this is going to be, you know, a wave B, and that is going to be wave 2 down here. I.e., this is ABC, this is like ABC or ABC, and we're going to get 1, 2, 3, 4, 5 for a running or a, expanding flat variation. And obviously, since we are already here, what we can do is add ourselves a level for us to ensure that we are moving up in the medium and longer term. 30.2, 3.47, guys. Once we break this level, I think that is going to be our sign, that's going to be our signal to for a continuation to the upside, okay? Because that will invalidate wave B of a flat. And that pretty much is going to be all for this week, guys. I want to thank you for following day by day, and thank you for commenting as well. And in case you do have other comments, of course, feel free to leave them on the comment section. But don't forget, if they're related to technical analysis, leave your technical analysis as well, because people need to understand what you have in mind. What is your analysis telling you? So that they can make educated decisions. So have a nice weekend, and we will be again here together next Monday.